Hi everyone, I'm Meenakshi from the Department of Commerce with Information Technology. Today in this video, I'm going to explain about the calculation of average due date. So what do you mean by average due date? It is nothing but the weighted average date of several different due dates for the transactions happened between two parties. So the average due date can be used in any case when the items of the same kind of nature and the between the same parties are represented by one date for the ease of convenience to calculate interest or settlement. So this kind of average due date is mainly used in case of uh, same items and the both parties are involved in the transaction. So these kind of average due date will be helpful to ease the transaction. There are two different methods adapted to calculate this average due date. The first one is where amount lent in different installments to be repaid in a single installment. So in this case, various amounts will be carried on in different settlements, but it has to be repaid in a single shot. So this is the case. Whereas the second case is where amount lent it in one installment, but repaid in several installments. So the lending amount will be settled in one installment, but it has to be repaid in several installments. So there are two different scenarios happens in calculation of average due date. In this video, we are going to focus about the first one alone, where the amount is lent in different installments. So selecting one of the due date as the base date is the first process to be followed in this first method. Any one of the available due dates can be taken as a base date. So many different due dates will be given in a problem. Different transactions will happen in different dates. So as a base date, we can take an earlier date usually. So the second step is calculation of number of days from the base date to the due date of each transaction. So the total number of days between the base date and the due date has to be calculated. Then multiplication of the amount of each transaction with the calculated number of days from the base date. Now we have calculated the total number of days from the due date to base date. We have to multiply these days with the actual amount of the transaction. So you will get a product. Then we have to add all the amounts of payments and all the products of amount separately. So dividing the total of products with the total of payments, you will get a number. If the above number is positive, then the average due date is the head of base date by that number of days. If the above number is negative, then the average due date is the date obtained by subtracting the above number of days from the base date. So overall, we can have a clear formula to find out the average due date, which is base date plus total of products divided by total of amount. These concept is easily understandable only when we apply a problem. So we have taken a problem to make it clear. In this problem, Kumar has purchased goods from Ravi. The due dates for payment in each being is as follows. So the goods are purchased from Ravi by Kumar. So the transactions has happened in different months and different dates, March, April and May. So Ravi agreed to draw a bill for the total amount due on the average date. Here we are going to ascertain the average due date. So we have to put a table which contains different columns, namely due date, amount, number of days from the base date, product. As we discussed earlier, we have to mention the different due days first, then the amount second, and then we have to calculate the number of days from the base date. So we have to multiply the number of days into amount so that we will get the fourth column as product. Now we are going to add all the amounts, namely 1000 plus 1500, 500 plus 600, so that we will get 3600. In the product column, we have to add all the amounts so that we will get 1,45,100. Now we have to apply these amounts in the formula. So the base date is 18th April, so which is considered as the early date given in the list of due dates. Now we have to divide the total of products 1,45,100 divided by 3,600 so that we will get 40. So we have to add 40 days from the date of base date 18th April. So which can be done with the help of separate rough work so that we can get the average due date as May 18th. So these are all the main things which have to be considered. while calculating average due date. This is how we need to calculate average due date. So thanks for listening.